Hey guys, welcome back to the Independent Investor Channel. My name is Ryan. I thought it'd be fun to do something a little bit different and offer some portfolio statistics for you, just by the numbers. And this is the first time that I've ever done this through the chronicle of the Independent Investor Channel catalog of videos. And I thought this would be cool. I just want to look at the portfolio from a little different angle. I think I don't want to have new investors come on and look at a portfolio that's really appears to be full of equities, whether it be single stock and passive ETFs in there. As good as those investments are, I see a lot of portfolios that are declared on YouTube, and in my opinion, my first impression is that they're very, very heavily levered. and this portfolio video, by the numbers, is going to kind of help you understand my current allocation to cash, my current allocation to stocks, my current allocation to passive investments, and finally my current allocation to bonds. And this is really going to help you understand. I just provided a video on the potential recession 2020. And I don't want folks to come on and misinterpret that I'm somehow fully invested in the stock market, because once you see these numbers, I think you are going to find that I'm really taking a cautious approach. I'm taking the approach that makes sense for me. I'm taking the approach that makes sense with respect to the current condition of the stock market. And nobody is ever going to get this perfect. Nobody's ever going to get it probably close to perfect. But I think it's more close to perfect when it makes sense for you. And this is just how it makes sense for me today, with the current condition of the market, at what my tolerance is for my exposure rate to the market. I talked about this all the time. I encouraged you guys to go out there and try to determine what it is your risk profile was and what your investing style is. And based on those things, you could kind of compare your style with your tolerance, and then compare it to how you want to seek out your exposure to the market. And I think what's going to be quite revealing in this video is how much non-exposure I actually have. And I think that'll really, really help you break down, when I put portfolio reviews online and they're $100,000 portfolios, and it appears as if I'm completely levered to the stock market, I think these numbers are really going to demonstrate something a little bit different, and it's going to give you a very, very key insight to my perspective on this current market. Now, let's jump right into it. Well, we've talked about this many, many times, and the cash amount is a luxury of a self-directed investor, okay? The flip side of the coin is when you go and sit down with a financial planner. If I were to go in and say, look, I've got 300 grand I want to invest, they'd be licking their chops, okay? They're going to want it all. That doesn't make sense for me, okay? It makes more sense for me to have a cash pillar. And I currently do. Cash pillar's running right now at about $161,387, okay? That's down to the dollar, penny for penny, what I've got. Now, the real telling figure in that amount that I just disclosed to you is that represents 49%, just shy of 50% of my total overall portfolio value, 49% in cash. A lot of folks out there are going to be extremely critical of that. Totally fine. I totally welcome that. I've got tough skin. Come on, throw tomatoes. No problem. Because like I declared at the top of the video, this is what makes sense for me. And the underlying lesson in this is how to look at your portfolio from a different lens, okay? And again, there's a lot of portfolios online, some very impressive portfolios. What I would like to understand is, what are those underlying fundamentals in that portfolio? Is it just a dominant stock portfolio and you don't have $500 in the bank? That to me is an over-levered portfolio. Now, could it work? Absolutely. Absolutely it could work. And I don't wish ill will on any of those folks who I, with my lens, consider it over-levered to the stock market. But who am I to say? That's just an objective analysis. That's all. That's all. They could win with that. But I think the critical question is are the holders of those portfolios satisfied with their level of exposure, okay, compared to the underlying aspects of the portfolio? Are they deficient in cash? Are they deficient in fixed equities? Are they deficient in a diversified passive option within the portfolio? I see some of these stock portfolios, guys, that are 100% levered to the market, 100% stock, and that's what they want, and that's what they're going to get. There is no rational metrics out there that justifies that level of aggressive levering to the stock market. I add this caveat. Do you honestly want to have that level of exposure to the market now on a 12-year bull market? I'll leave that answer up to you, all right? So 49% in cash, 161,387, okay? The stock portion of the portfolio, this is really interesting. I have really condensed down the growth. There's some growth companies in the portfolio that do pay a dividend, that are considered growth and income, and the allocator doesn't know how to separate those two. But make no mistake, I am looking to get blue chip types of companies into the portfolio. And the $90,300 that's currently comprised of single stock are basically dividend payers within the portfolio, okay? Now, this represents 27% of the total overall portfolio value. Am I high? Am I low? I don't know, but it makes sense for me, okay? Now, if you guys come on and you say, Ryan, you're crazy, you need to have more stock or you need to have less stock, it makes for some healthy discussion. But again, the whole premise of this exercise is to run you through my deliberation in understanding what categories of my portfolio, in other words, what pillars in my portfolio am I comfortable having at those certain allocations in respect to where the stock market is now. Okay, that's why we run this exercise. And the goal is for you to look at how I deliberate and for you to run yourself through that same deliberation. Ask these questions. How diversified are you? Okay, do I have any bonds in the portfolio? How much stock to cash ratio do I have? You should know that. It's very, very simple to figure, okay? Very, very easy questions to ask. Very few out there are willing to ask them, okay? Number 3 is my passive investments. This is the aspect of the portfolio that I'm actually trying to build up more. I very, very much am sold on the passive aspect of diversified products out there in the market. You guys can choose whichever ones that you want, okay? I prefer Vanguard, you guys know that. I love their products, I love the low expense, and I love the exposure to the market, especially through their exchange traded funds, okay? But right now, the passive aspect of the portfolio in way of diversified ETFs makes up $57,830. That is 18% of the portfolio. 18% of the portfolio is comprised of passive ETFs and passive index funds. Okay, that's what we've got. I like this segment of the portfolio. It shows my concerted insistence on diversification within the portfolio. It really does render my acknowledgement to how important diversification is in the portfolio. And this is why I'm looking to strengthen this 18%. I think I'll hold true on the stock side of the house and look to backfill on the passive aspect of the portfolio to try to build up that passive base a little bit in that portfolio. And finally, I'd like to disclose to you guys the bond section of the portfolio. I'll be covering this in a future video. But right now, for the bond section of the total overall portfolio is $19,393. And you think, wow, that's pretty awesome. Well, in retrospect, okay, this only makes up about 6% of my total overall portfolio. Is there work there to be had? I believe that there is. I'm always critical of my portfolio. Don't ever think for a second that I look at it and I'm like, I'm perfect, I'm good, I don't need to look at it again. No way. I don't think like that. I'm always looking for a strategic edge, and I'm always looking to sharpen my skills in the stock market, and I'm also looking to sharpen my deployment of those skills when it comes to making my portfolio stronger. Okay, it's done nothing but render results for me, guys, and it will render results for you too as well, depending on how hands-on or how hands-off you want to be. You can succeed with either program. Comes back to your investor profile, right? Very simple, all right? Another statistic that I pulled from this by the numbers I thought you guys would appreciate is, out of the figures that we've disclosed to you on this video, 63% of the total overall assets that I disclosed to you through bonds, the passives, and the stocks are all tax protected. 63%. Ask yourself, if you guys are working with taxable brokerage accounts, ask yourself, what is the percentage of your total overall portfolio that enjoys the guarantee of tax protection at the eligibility age? I think that's super, super important for you guys to understand. If you don't understand it, look at it and identify how much of your assets you have in that Roth IRA vehicle, which allows you to dub those contributed dollars and appreciated dollars in there tax protected dollars. Very important. And in closing, I would say that just because I declared the numbers to you doesn't mean that I don't have critical aspects of this portfolio that I've got earmarked for action. I do, okay? A lot of people are going to say you're too heavily levered in cash. I concur. But the thing about it is, the way I justify the current level of exposure to cash is completely correlated to where I think the stock market is now. Could I lose and be wrong, and the stock market continues up for another 20% of appreciation? Sure, sure. But I don't correlate those. I don't look at a what if. What if this did this, and I had this exposed to this, and therefore it would render me a success? I don't think like that. I keep the cash pillar in a condition that is indicative of my current acknowledgement of the stock market. And again, if I'm going to be wrong, I'll be wrong. But I'm setting myself up for the potential to be right, okay? And on a 12-year bull market, this is just where I feel comfortable, okay? Win in either market, an up market or a down market. And I think you guys will find that by the numbers really gives you some insight on how the actual dollars break down when compared to the total overall value of the portfolio. Guys, thank you so much for tuning into the video, man. You want to hit the subscribe button, help us support the message that we're putting through. If I've missed anything in the video, leave the comments, as you guys always do. Strike up some community discussion for new investors to read over, kind of understand how we're mulling this information over in the investing world. Share the video, certainly, with anybody who can benefit from the information. And thank you so much for tuning into the video, and good luck in your investment future.